Hi guys, welcome to my channel. So before we get started, make sure to hit that like button, also subscribe to my channel. In this video, we will talk about how to retire by 40 with dividend investing. So make sure to watch the full video. I have received a plethora of comments and positive feedback regarding the early retirement strategy. Many readers and patrons seem interested in the system and are committed to adhering to the suggested guidelines. This video serves as the sequel to my original retirement strategy, with a special focus on developing a dividend portfolio that can stand the test of time. Dividend investing. The path to financial freedom is not a get-rich-quick strategy. It requires long-term commitment and patience. With proper management and execution, dividend investing will lay a solid foundation for your investment journey. Its concept is no rocket science. The ultimate goal is to create a stream of dividends that can finance all your daily expenses to the point that one will no longer need a paycheck to support his lifestyle and family. A well-built dividend portfolio should be hassle-free compared to other investment vehicles, for example real estates, since dividends are distributed automatically unlike rentals collected from tenants. However, the true wonder of dividend investing lies in its power to produce an exponential return in the long term. With DRIP, Dividend Reinvestment Plan, dividends received will be reinvested into the underlying stock, leading to more dividend income in the future to be reinvested and so on. Investors only need the discipline to stick with the strategy, and ultimately the power of compound return will do the tricks over time and ensure financial freedom for its masters. Index fund vs. individual stock. I always advocate investors, especially laymen who lack stock picking capability, should stick with a passive investing strategy and focus on index funds. Again, there is no one-size-fits-all investment strategy, but it just happens that passive investing fits perfectly into my lifestyle, and perhaps one of you who are watching this. The strategy. The first and foremost step to financial freedom is to find your financial freedom number. According to Statista, the latest total average U.S. consumer spending amounted to approximately $63,000, which includes housing, transportation, food, insurance and pensions, healthcare, etc. Here, consumer units include families, single persons living alone, or sharing a household with others. In other words, a portfolio paying $63,000 worth of dividends will allow one to achieve financial independence. Yields above 5% are rarely seen, and more often such payouts are not sustainable. For example, the Global X Super Dividend ETF, SDIV, offers a whopping 8% yield, yet its stock prices have also been declining for 10 years, which is eventually a zero-sum game. In our book, we look for only those with high dividend yields while simultaneously offering reasonable capital gain potential. Thus, below I present the 60 by 40 medium risk portfolio, which can be replicated easily by 3 ETF. This portfolio offers a humble 9 to 10% annualized return with a reasonable yet not too aggressive yield of 4%. The 3 ETFs synergize wisely and serve 3 main purposes: HYG as the cash cow, DES as the growth driver, and VYM as the backbone of the portfolio. For conservative investors who prefer steady monthly cash flow, the suggested portfolio could be a viable choice. By using the recommended settings, one would need a total of $1,575,000 to achieve financial independence. Key takeaway: there are plenty of ways of achieving financial freedom, and dividend investing is one of them. It never offers one any excitement or euphoria, as if trading cryptocurrencies, nor does it grant you the shortcut to riches. But it is always there, beholding and waiting for the treasure hunter, who has the patience and long-term commitment to get to the final destination. Yet, humans are impetuous in nature and inclined to seek early gratification. Such a mentality of chasing romantic desires in investment is the pitfall of all speculators. We, as intelligent investors, must stand out from the crowd. Dividend investing might start slow, but for those who have the dedication to stick with it, you surely deserve an early retirement. Dividend stocks, 2022 target $17,000 passive income. Dividend income is my favorite form of passive income. Investors own a small part of these public companies, and they work for you. These days, I focus on companies that consistently grow their dividend income over the years. This strategy will ensure that our dividend income keeps growing even if we don't add new money. Currently, we reinvest all the income from this portfolio, but we'll use it to pay our expenses once Missy's RB40 retires. As for reinvestment, I don't drip in this portfolio. I just accumulate the dividend income and invest in more dividend stock or real estate crowdfunding whenever I can. For 2021, I hope to generate at least $17,000 from our dividend portfolio. EOI update. We generated $14,144 from our dividend portfolio. This is way below my target. I traded some stocks, and some of the newer holdings have lower dividends. Disney isn't paying dividends right now. Visa's dividend is about 0.7%. InMode is a growth stock. In 2021, I focused more on total portfolio growth rather than dividend growth. Missy's RB40 puts off retirement, so we don't need income right now. Where to invest? Currently, our dividend portfolio is with Vanguard. For new investors, I highly recommend First Trade. First Trade is a great discount brokerage that I used for many years before moving to Vanguard. Trading is free now. Check them out. First Trade is a great online brokerage. Robinhood is another nice place for beginners. You can start investing with very little money by buying fractional shares. If you want to invest $100 in Apple, you can do it. They have free trading as well. Retire by 40? Here's how to do it. When it comes to retirement, it's never too soon to start planning and saving. The 2019 Retirement Confidence Survey from the Employee Benefit Research Institute found that 1 in 3 Americans think they'll need at least $1 million to enjoy a comfortable retirement. Unfortunately, the average retirement savings across all Americans was $98,800 in 2021. If you plan to retire at what Social Security calls your normal retirement age, typically 65 or 67 for most people these days, you could have several decades to save. If you set a goal to retire by 40, on the other hand, you're going to have to save far more aggressively. But that doesn't mean you can't do it. Here are some ideas. One rule of thumb recommends multiplying your desired annual income in retirement by 25 to come up with a savings goal. So, if you want to have $50,000 a year for 25 years, you'd need $1.25 million. But that assumes you retire at a relatively conventional age. If you're looking at an extra 20 years in retirement, you need more like $2.25 million instead. Of course, you may be able to set the numbers a little lower if you'll have money coming in from a side hustle or a business in retirement. Also, take a second look at your budget to see if you can get by with less income each year. That's one reason some people retire abroad. And be sure you factor in Social Security payments for when you reach your 60s. You'll need to have paid into the system for at least 40 quarters or 10 years to qualify. Estimate your savings growth. When you have an idea of what your long-term goal is, look at how much you already have saved and how long you have until you turn 40. This gives you a framework for how much you'll need to save each year and each month to get there. Let's say you're 25 years old, you're making $50,000 a year, you're just beginning to save, and you want to accumulate $1 million if you save half of your income each month, $2,083. You could have about $660,000 when you retire at 40. That could translate into about $1,222 a month in income over 4 to 5 years of retirement. Keep in mind that this is an overly simplified example. It assumes a 7% annualized return for the 15 years before you retire, and then equal monthly withdrawals for the next 4 to 5 years. What do you think of our video? Let me know in the comment section below. If you enjoyed this video, make sure to hit that like button. Also subscribe to our channel before you go. Thank you for watching.